Hey traders, it's John Howell here again with you from tradinginvesting4you.com. Anything I do say in this video is general advice only. I don't know your personal situation, and as you are looking at right now, look at today's bar in Dow Jones. The markets are really whippy right now. They're whipping all over the place, and so it's important that you do look after yourself. And moving forward, just make sure you're utilizing these tools together with what you already know to make the best decisions you can do in the markets. Okay, that's out of the way now. Let's actually get into the markets. What we're going to look at today is what the markets are doing right now. We're going to look at some rules about some trading rules that I believe that you should be following when you're actually in the market as well too, and a whole lot more of what's happening right now. Looking at the Dow Jones Industrial Average, let's go to the weekly chart here. We can see this big up week. It's only 1 week here, but you can see this market's really stepping higher. Now if you have a look at this here, by looking at the strength of the moves, and this is quite key here, if you see this here, we made a low, made a high, and we made a higher trough. You see here that when the market makes a higher trough and continues to do that, you can see we have a nice little step up here. Right, we came down, made a double top, came down, made a trough, came up, made a peak, came up, made a little higher trough, ran up, made a peak, came down, made a trough, now it made a peak, and now it's making another high trough here. So another high trough. This thing's booming now to the high side. Dow Jones Industrial Average is continuing to move to the high side. Now if I dive a bit deeper and move over to say the 60-minute chart, okay, the 60-minute chart, you can see what's been happening here on a smaller time basis, right? 60-minute chart, we've been breaking up a lot higher, breaking up this big massive move today, and based on what we said, if I go back to the daily chart now, I actually did a video yesterday, and all I saw was this, and I said based on what I'm seeing right now, we should get some nice upward movement, at least for the short term, and that's exactly what has happened moving forward through there. So that's exactly what I see right now on the Dow Jones 30. Once again, if we go back to the hourly chart, we can see we have this big upward move, and so I see we had this big up move through here, and now we're having a small little pullback. What that to me says is that we should get a nice little, probably a small little pullback through here somewhere, and then probably just shoot off back up again up here. Looking at the overall markets, if we go back to the daily chart again now, we can see right now that we are popping right back up, and we're getting right up into this what we call resistance level. You can see up this level here. So this is a real telltale sign, but I believe we're likely to push through and continue on high and probably reach up to new highs after this. We can see our stochastics are getting down to the oversold section through here, popping up, but we have this resistance here, a little resistance here, support here, almost resistance through here, resistance through here, resistance through here, and also up right now as I speak right now, we're up 1.8% on the Dow Jones Industrial Average, and now we're closing right here right now on this big up bar today. So to me, this is very strong. Not much increase in volume as we did yesterday. The day before, you can see we had this big increase in volume, but what we're looking at right now is we're looking at actually not that big of increase in volume. I would have liked to see a nice little spike, especially compared to the day. So that may be something we want to keep an eye on for, but this thing looks like it wants to try and push higher. You can see it came down towards my 50 moving average and my 200 moving average. The 200 moving average was definitely a key. You can see on the 200 moving average, the market ran up, bounced off the 200 moving average, ran back up, bounced again, and now it came back down, and now it's bouncing again. So this thing looks like it wants to continue on higher with that. Now remember, if we always go back to the weekly chart, this weekly chart is continuing to step higher on an overall basis. If you look at my sort of 50 moving average on a weekly chart, this is the 50 moving average, you can see this, when it gets to these areas, it really comes down and rejects. It didn't that time, okay, came back up, sort of had a bit of havoc through here, but the last couple of times, you can see here, came down, bounced off, came down, bounced off, came down, and bounced off. So to me, this thing looks like it's set to move higher on an overall basis, looking on the Dow Jones Industrial Average. Okay, I'll keep you updated of what's happening in the markets as well. Looking back over the daily chart right now, but you can see this big up bar through here. The stochastics are oversold oversold. And so this thing looks like it wants to keep pushing on higher and keep probably running up towards the new highs up there. And so that's what I do see. Now, a bit of a trading tip. Right now in the market, as we speak, there's a lot of stocks that are gapping, like eBay. If we go over and have a look at eBay here for a minute, what we're looking at here is we're looking at eBay, and we can see eBay has actually gapped up massively through here. Nice big gap through here, and it's continued to run up. What I do say is a lot of amateur traders out there, when they're trading, they see this gap and they see this big run, and then this is the time they actually start to get into the stock. Okay, this is the time to start getting into. This is the time that they start getting into the stock. When professionals, that's actually the time when they're actually starting to consider exiting. See, with me personally, down here is where I actually personally got into this stock. Now, I'm not telling you should get into this stock because the market's run up too far. But what I'm saying is that this is where I got in. Round about here, this is where I actually started to get into this particular stock here. As you can see, the market actually pulled back through here to this level, and then it shot up through here. As you can see, I got in around about here, and now the market is now up here somewhere. Okay, so when you're trading options, that's actually quite a nice profit on an option. Now, I'm not saying, again, I'm not telling you to get in. I'm actually saying this is actually too late. That's the reason why I'm saying that I'm actually in this trade myself. Okay, but what I am telling you, and I'm using this as an example of, don't chase the market. Okay, do not chase the market. Wait for the market to pull back and then be looking to get in on the market. Right now, this market's made a big gap, and yes, this eBay, I do believe eBay is likely to continue on up and continue running. I actually have a projection on eBay up the top here. You can see this projection line up the top here. So I actually have a projection on eBay to be hitting this level up here, which is, what's that, the 56, 57 level. So I have a projection of eBay actually running up towards that level up there. Okay, but just because I have my projection doesn't mean it's going to happen. Okay, and so the whole point is that when you get these gaps in the markets, they generally do get filled. So don't chase the market. If the market's already moved a huge amount, since the lows here, you can see basically from since the lows to up here, it's almost a 10% move in the stock in 2 days. So you'd be doing yourself a dissatisfaction by chasing the market. Don't ever chase the markets. The times you want to be entering in, if you're going long or buying a stock or getting in a directional trade, is when the market pulls back. As an example here, what I saw is I saw this big up move through here. I waited for the market to pull back. It bounced off, and this is here, round about here. This is when I started entering the stock. Right, the market pulled back again, and then the market's taken off as well. So you want to wait for that pullback. Don't ever, as you can see here, what the professionals wait for the pullback, and they get in here as the market's starting to move, and they exit up here as the market's had a decent move. What happens is the amateur traders, they actually get in, they see this stock, and then the market runs up, and as the market runs up, they go, oh, I don't want to get in, I want to see more confirmation, and the market runs up, and here they say, that's it, I've had enough, it's breaking above resistance, I'm getting in. And this is the time they either get chopped around, or the market has a pullback like it did here, and then they end up getting stopped out, and then they get in here, and then they get stopped out, and so on and so forth. Does it make sense? So make sure, no matter what you're trading, if you're trading for a directional system and you're looking for long trades, meaning you want the market to go up, then wait for the pullback. Okay, wait for pullbacks, and use the stochastics to help you out with that. As you can see here, one of the things that I got into, one of the things that I did when I got into this stock is I used the stochastics. The market bounced off this resistance level here, and I saw the stochastics down the bottom here. Same as here, the market ran down towards my 50 moving average and popped up. Look at my stochastics down the bottom here. So that's actually telling me that we should actually get a nice run to the high side. Again, use tools and use conjunctions of different things and different ways of different looking at the market. And when you're doing that, it's going to give you the better odds. As you can see, I had 3 things going for me on this particular setup. 1, the market had a big run up and it came down towards a support and resistance level. 2, it actually had the bounce, so I actually waited for a bounce first. 3, I had the stochastics getting almost down to the oversold section, and so that was the 3 things that tell me that we actually should be moving to the high side. I got in here, the market's gone sideways for a bit, and then it's popped up out of here, and we are here right now. And to me, I have a target projection of $56, $57, somewhere around about here. And how long, I don't know, but that's where my target projection is on eBay. Again, I believe it's I'm saying this right now because it is too late. If you did not get into this eBay trade, then it's too late. Now, I know some of my private clients and some of my auto trader clients, they actually got on to this particular setup because they actually saw this on my weekly recommendations. Now, if you're part of my weekly recommendations, you would have seen that this is actually one of the stocks that I'm talking about. And yes, I do trade my own weekly recommendations. Funny that, you know, a lot of companies out there, they don't actually trade their own money on the stocks. Now, me personally, I do. And so this is the 200 moving average. Clearly the 200 moving average, this thing's breaking up and moving up higher, and you can see this big gap up. The whole point here is that, one, you're getting a tip right now, and you're actually seeing exactly the reason why most people lose in the markets. They actually get in as the market's running up through here. They wait for the market to move, and then they get in up here. No, don't do that. Wait for the market to move and then have a pullback, and this is the time to be entering, when the market pulls back and then it pops back up. Market pulls back and then pops back up. How do you look for that? Look for the stochastics. Look for the stochastics, okay? Look for support and resistance levels. Okay? Because remember, 1, look at price action first. 2, look at support and resistance levels, SR. And then 3, look at the stochastics as a timing entry or timing tool. Okay, well, that's my tip for today anyway. Again, looking at a Dow Jones Industrial Average, using what we just talked about this there, markets bouncing off the 200 moving average and the 50, big up move. The stochastics are way down the bottom here, getting some movement on the volume here as well too. Okay. And then my tip for the day, which as an example on eBay, okay, as an example on eBay, wait for the pullback first. If you're looking for long entries, wait for the pullback and then get in there. And how you can time that is use the stochastics as a timing tool. See, you see this little pull down here. Use the stochastics as a timing tool to actually get into the markets. And a great example when we're actually talking about this, we can actually see that this line through here. This line through here, as actually the market's actually running up through here, you can see that we had all the support through here. Okay, we had all support through here. And then as the market came down, look where it happened. It came right down to that support level. But where was the stochastics? The stochastics was down the bottom here, right? Giving you a turning point. Look at that. Bang! Popped up and then continued continued running. That to me was an amazing entry level. Now look at this here. We had this support level, this overall support and resistance line through here. Okay, let me draw something here. This overall support and resistance line. Then we had this support line through here. Look what happened to the stochastics. Markets down the bottom here, pop back up, and then boom, look at the run through there. So by using the stochastics, combined with conjunctions of support and resistance levels, we can generally get some nice moves. Stochastics down the bottom here, run up. Stochastics down the bottom here, run up. Stochastics down the bottom here, run up. Okay, stochastics down the bottom here, run up, and so on and so forth. But as you can see, when it starts to get into these oversold sections, the market tends to run. So if you do know that when you're trading, then make sure you're utilizing this when you're actually looking at the market itself. Okay. So don't chase the market. Look at support resistance levels. I've given you a ton of information on this video, and just leave me a comment below and let me know what you think about this video, and make sure you're utilizing this when you're moving forward trading this year. Okay, start to stack the odds on your side. Don't look at a dozen indicators. As you can see, I don't use a lot of indicators, and it's actually quite simple to actually trade the markets. Okay, so and start to stack the odds on your side even more. Wait for support resistance levels, wait for trend analysis, wait for the stochastics, wait for pullbacks, and then entering on pullbacks. Don't ever you are stacking the odds against you so much worse when you're actually when the market runs up and then you're getting in up here. Okay, and again, look at that, but look at the stochastics. The stochastics saying, listen, this may get a turning point through here. So well, that's it for me. This is John Howell here. Make sure you come down to tradinginvesting4u.com, where you can actually check us out, and you can actually get a lot of free gifts and stuff like that. Make sure you put your email in on when you actually go to our website. Make sure you put your email in, because we're actually sending these videos out and articles and tips and hits and guidance on a regular basis. So make sure you actually do that right now. Head over to our Facebook, which is facebook.com/shared trading mastery. Okay, you can actually check us out on there, and you can, and we actually, again, we're on a daily basis, we're updating new articles and new education to keep you up to date with the markets. And you also can check us out on our Twitter feed, which is this one right here, which is twitter.com/John Trader. Twitter.com/John Trader. Make sure you do come down to there. Make sure you do check us out, and make sure you do and see that as well too. Okay, so let's go back over here again. That's the S&P 500. Big up move by the S&P 500. Big up move from the Dow Jones Industrial Average. We're seeing a lot of move on the actual market itself. Okay, there we go. And so that's it. That's it for me, guys. No matter what happens, say to yourselves every morning, every afternoon, evening, and that is success can be yours if you go claim it. So step up, take massive action, and face your fears today.